Good afternoon. This is Brian Kasal, the CEO of FourStar Wealth Advisors, with some comments for you on this extraordinary day. Thursday, the citizens of the UK voted to leave the European Union, and as a result, Prime Minister David Cameron has already resigned. Today, they begin a 2-year process to unwind their governmental connections with the European Union and the other countries and strike new treaties. So to consider what happened here and the turmoil that's pursued in the markets, there is always a bias whenever there's a possible change election toward the status quo. So considering that bias, to actually have the voters of the UK vote to leave the Union is a very dramatic development. In our view, however, this vote was probable. This development is one that's been echoed by many other changes around the world. Europe has been under significant pressure with changes to European economic policies. More recently, immigration policies have been pushed by the European Union. Liberal spending policies around Europe are being rejected in many countries. There has been a rise of new political parties and alliances that are rejecting the status quo. So this vote, we think, is simply a realization of all that concern. Some factors driving change in Europe are very similar to what's happening in America. In the US, we've seen a rejection of the status quo as well in this political season. Bernie Sanders almost beat Hillary in the Democratic nomination, and his supporters are demanding change, and they're still holding out in some ways. Donald Trump rose up and beat all the regular candidates in the Republican Party. Then voters want change, and they're willing to disrupt the status quo. Voters want that change, and I think we're going to get it no matter which candidate is elected in the fall. So while the short-term disruptions cause the status quo to be challenged, it's never easy for folks to deal with this. Changes possibly could end up being positive. The world economies are in difficult shape and have been for a while. Priorities, in many cases, many consider are out of whack. Government debts are at record levels around the world, and entitlement spending is also at record levels. Much of Europe has been in recession for a while, and certainly this Brexit turmoil will not help in the short run. In America, growth has been tepid but steady, but it seems as if a realignment major is underway anyway. The world economies need to go back to growth and productivity as a way for the world to begin to prosper again. Perhaps that will happen with the realignment of priorities that voters seem to be demanding in both Europe and the US. America and the US economy, however, enters this difficult period in much better shape than most other economies in the world. While no one can predict what will actually happen and what the turmoil will do specifically to our economy, suffice to say that our economy is structurally sound and growing right now. We should benefit on the world stage from a flight to quality in the US, as we've seen for a number of years. Foreign currencies around the world are tumbling as investors are flocking to America in times of trouble. So, talking about investors, this huge disruption of world markets has been tumbling all morning. FourStar has been advising investors, as many of you know, for years, to be very cautious and consider risks that you're taking at all times. We think the stock market pullback, however, for those who are willing to and able to take risk, could actually be an opportunity. For FourStar Wealth clients, our main dynamic portfolio entered today 25% in stock and a larger allocation to commodities, namely 50%, including primarily gold and silver, which are up nicely today, and 25% simply in cash. So that portfolio will show very limited damage today as a result of today's action, and by the numbers right now, might be up as much as 1% on the day. We are advocates for many investors who can take some risk, if they are taking risk, to use some of these dynamic portfolios to protect and diversify portfolio specifically for days like today. Our other U.S. stock portfolios had higher levels of cash, 25 to 30% in many cases, to give more protection than most investors have of their current advisors. So we're going to have a few more comments in the next week or so. As we're nearing the end of the quarter, we were going to come out with our second quarter commentary, but I wanted to make sure that we walked into the weekend with at least some comments on what happened today, a very historic day. Let me just offer this one last additional comment. The bottom line for any investor that has worked with us on a strong, well-vetted financial plan with long-term goals and long-term assumptions, nothing today should be proven to be material to disrupt your plan. Today's events are certainly extreme, but no one day can sink a 20 or 30-year financial plan. One day, 1 week, even multiple months will not sink a financial plan. We do have time to course correct if there's any course correcting that needs to be done. As long as the assumptions are built into the plan and an investor continues along with those assumptions, income, outputs, growth over time, everything should be fine. So to quote a recently popular phrase, I think at this point today, everyone should keep calm and move forward. And it's summer, it'll be a great weekend. Everyone should go have a good weekend. Don't worry, but if you are worried, give us a call.